Now, remember 2021 when China banned all types of cryptocurrency transactions? Well, a recent report from Cointelegraph suggests the country may be opening up to the idea of NFTs or non-fungible tokens. State-backed newspaper China Daily is looking to create its own metaverse and is looking to give a 2.18 million yuan, that's about a $390,000 project to create an NFT platform. The platform will allow uploading and managing digital collections with pricing, bidding, and a multi-currency settlement system integrated into the platform. Now, this certainly feels like a sign of changing times. Could China's official go-ahead be the bomb NFT markets need? Well, that's because it's been yet another tough week for the NFT ecosystem, and our data analyst Yehudah Petscher joins in to talk more. Yehudah, could October bring respite for NFTs?
All right, let's start with something that people have been hearing about on a daily basis now for the past couple of weeks, and that's the Uptober conversation. Uptober refers to crypto, which traditionally sees an upmarket in October. More specifically, though, that's Bitcoin, which 8 of the past 10 years has finished higher. Now, on the NFT side, people are wondering if Uptober extends to this market as well. I wrote about this last week in my newsletter with Crypto Slam, highlighting how actually the past 2 Octobers were consistently down for NFTs, so I've been calling it Floptober. We'll see how it plays out by the end of the month, but as of the first couple of weeks here, well, the Forkast 500 NFT index reflects that the market is down. Now, I'll be happy to admit I'm wrong if things change by the end of the month. I don't think they will. I'm definitely expecting a Floptober in NFTs again. Now, the first week of October followed all trends when it comes to sales. The market was down again in sales volume, unique sellers, buyers, total transactions as well. This was the 7th consecutive week of declining sales in the NFT market. This week, those sales coming in at $55 million. That's across blockchains, yet again putting us at levels we saw in January, February 2021. The low volume was accompanied by some unfortunate news that reflects the state of the NFT economy, and nobody was immune. Last week, we saw a Tezos art NFT platform that announced they're closing in the upcoming months, but we also saw some layoffs that are coming from some of the biggest brands in Web3. Yehudah Labs, the creator of the Bored Ape Yacht Club, the Other Side Metaverse, and the owner of the CryptoPunks, well, they announced a major round of layoffs last week, and this was accompanied by news that they're making a rather significant change to their game plan. Daniel Allegre, the CEO of Yehudah Labs, said, "It's a challenging time not only for our industry, but also for the global economy. We must stay focused on our core strengths as we continue to create unique, engaging experiences for the broader Yehudah audience." Now, Allegre went on to say that this restructure, well, it impacts the USA teams right now, but they are looking at the international teams as well. So expect some changes, probably some news coming about layoffs over there as well soon. Yehudah Labs stated that they will now make their Other Side Metaverse their core focus, and they'll bring their MeBits and 10KTF collections into a much larger role within that ecosystem. All of this differs from their prior efforts that saw them creating multiple gaming experiences like Dookie Dash and the Heavy Metal Forge. On the community front, Yehudah Labs is bolstering their support for their Made by Apes platform, which is their licensing platform, and ApeFest 2024 is coming in just a few weeks. That's taking place in Hong Kong this year. So the bear market took a significant bite out of one of Web3's biggest native brands, but the changes made will hopefully serve them well into the future. Yehudah Labs wasn't the only one announcing layoffs last week. Proof Collective, which is Kevin Rose's group behind the Moonbirds collection and the Art Grails, also Oddities, well, they announced layoffs as well, cutting their team's size and offerings down in an effort to build a much more sustainable ecosystem. Proof Collected had raised over $50 million in a fundraising round, also brought in over $60 million from their Moonbird primary sale. Seeing a project with that type of money at their disposal, making such a significant change, is of course concerning to holders. And some of those holders selling these NFTs in bulk, that's including Ryan Carson's NFT fund that purchased 607 ETH worth of Moonbirds last year. Just last week, sold the entire lot of them for just over 33 ETH. Pretty huge loss there. Last week, we saw a Tezos marketplace called Versum announce that they're closing their doors this year. Versum was well liked by both artists and collectors. Now, early on, NFTs purchased on Versum could only be traded on Versum, and I suspect limiting collectors' opportunities to sell significantly impacted their ability to grow during a very crucial time. Now let's shift to the building that is happening in NFTs. The Pudgy Penguins, who 2 weeks ago announced their partnership with Walmart that brings their toy line to 2,000 stores across the United States, well, they now announced that Smiths in the UK will also be carrying their toys. Luca Netz, the CEO of Pudgy Penguins, said they've already sold 25% of their supply at Walmart, well on their way to meeting their objective of 70% of that supply being sold out. Netz, however, came under scrutiny last week for some of his previous business practices, which included drop shipping and online course offerings, both being labeled as borderline scams. Whether this will impact the Pudgy Penguins brand or their NFTs remains to be seen. We'll keep on top of this developing story over the next few weeks. And finally, OpenSea released a new way to mint NFTs with their new Creator Studio. This does away with OpenSea's traditional way of minting, which on their website they referred to as lazy minting. Now creators can mint entire collections on OpenSea on their own contract, and they can choose from an assortment of blockchains to mint on. And these NFTs, well, they can be purchased with credit cards, so this is a huge addition for the NFT space. There's a downside here, though, that's left the community largely unimpressed, and that's that OpenSea's taking a 10% cut of all NFTs sold via primary sales. That's on top of an existing 2.5% transaction fee. Now's the time for other platforms like Manifold, Rarible, and Blur, maybe even some newcomers, to come take market share away from OpenSea. We'll see just how the NFT ecosystem shifts from this. There's no denying that it will shift. That's just the nature of Web3. Back to you.